Hello, this is Jordan, and this is your Precious Metals video market update. This video is being recorded on the late evening of Thursday, December 12th, 2020. And in this video, I'm going to discuss the technical outlook for gold, silver, and of course, the gold stocks. And starting off, let's look at the daily bar charts of gold and silver. And both metals have a very strong confluence of support, which is slightly below current levels. Now, gold closed at 1472, and its strongest confluence of support, a month or two ago, I would have said around 1400 or 1380. But right now, it's at about 1410 to 1415. It's in that area. If you look at the 200-day moving average, it's almost at 1410. It's climbing. So a week or two from now, that's probably going to be close to 1415. And if we look at Fibonacci retracements, if we take the 38% retracement from the August 2018 low, that comes in that area around 1410. And also, if we take the 50% retracement of the move that began in May, when gold was below 1300, that line comes in at around 1412 or so. So all of these indicators, as far as a potential downside for gold and where the next low could be, are pointing to around 1410 to 1415. And for silver, we see something fairly similar in that the 200-day moving average for silver is at 1625. If we're looking at just the pure price action, the $16 level has been very important over the last 4 years. So, I mean, that's pretty close to the 200-day. And then the 62% retracement from the 2018 low, that comes in just above 1600. So, long story short, the metals have been much weaker than the shares, and I still think that there's some short-term downside potential here. Look for a potential bottom target for gold around 1410 to 1415, for silver around 1600 or a little bit above. And an issue for gold is that there's still too many spec longs in the market. Now, curiously, that has not improved that much despite a 3-month-long correction. However, gold has not corrected all that much. I mean, it came down to 1450 and now it's at 1472. So it hasn't corrected that much in terms of price. It's corrected in terms of time. Yet that has not been able to reduce the spec longs. Several weeks ago, the net spec position for gold came down to 42% of open interest, but the last reading was back up to 46%. Now, historically, if we look at the 2000s, a lot of the interim peaks there, after those peaks, and I've marked them, as you can see, the net spec position during the following corrections, it tended to come down to 30% or even as low as 20%. So that doesn't mean that it has to happen exactly this time, but that's just a guidepost that we can use. And again, when gold, I believe it got down to 1450 or maybe it was in the 1440s, that's when the net spec position hit 42%. Assuming gold comes down to that 1410 to 1415 area, or maybe intraday it'll even test 1400. If and when that happens, I think the corresponding reading for the COT would probably be around 35% or so. So I think that would be a move in gold down to that level. That would be sufficient enough to wean out some of the spec longs and perhaps even end the correction. Now, let's look at the stocks, because the stocks have obviously been stronger than the metals, and that's exactly what we want to see, especially at this point in time, while the sector is correcting and while while the stocks are getting ready for a potential huge breakout in 2020. So this is GDX with several other things I'm looking at in the chart. The most important are the top two. Obviously, the chart of GDX and then the advanced decline line. I've talked about the advanced decline line in other videos, but first, back to price. Look at the price action at GDX. After this breakout, after the peak, after the breakout above 25, Then it peaked around 31, right at the 2016 high. And I was saying, we're going to see GDX come down and test 25, maybe even 2450. It's going to have to come back and test 25. But you know what? That hasn't happened yet. The GDX tested 26 3 times and successfully. So, and what we've seen over the last, few weeks is starting to grind higher a little bit. And so it looks like it's probably confirmed a low at 26. Even if we do see gold come down to 1410, I think GDX is not, it's going to hold above 26 if it tests it. So we've probably seen the corrective low in the stocks. And, not only based on the price action, but also look at the advanced decline line. You guys know I've talked about this as a very important leading indicator. Only one time in the last 5 years it's given a false signal based on what I'm looking at. And just in recent weeks, a couple of times, the advanced decline line hit a 3-year high. So, a month or so ago, I was talking about there's higher lows, there's a positive divergence in the line, but it's even made higher highs to the point where it's made a 3-year high. So that is a very strong positive divergence. Again, that tends to be a leading indicator in any market that you're looking at. So the price action of GDX, very strong in a correction, and that's doubly confirmed by an even stronger advanced decline line. So that all looks really good. And that's why, in the recent interviews I've done, videos and articles, why I am really bullish for next year. And, another thing, if we move down a notch lower, the GDX against gold ratio, that, and you see the blue arrow there, that has held above a rising 200-day moving average several times in the last few months. I believe it today, even though the market kind of didn't do much, that line still hit a 2-month high. And here's the best part about this. GDXJ in the silver stocks are stronger than GDX. So that's even more encouraging. So the advanced decline line for GDX is great. GDX is outperforming gold, but GDXJ is even stronger. It's outperforming GDX. Now at the bottom, that's kind of the last thing I'm looking for is that's GDX against the stock market. If and when we can see the gold stocks really start to outperform the stock market, that could be the last tell and the final signal that precious metals are getting ready to begin that next move higher, in the mining stocks especially. Now, this is a short-term chart here, candle chart. GDX is at the top, GDXJ in the middle, and then at the bottom we have SIL for the silver stocks. And with the red arrow, I'm showing the high that these ETFs made in early December. Now, yesterday or Wednesday, you're probably watching this on Friday. Wednesday was obviously a good day after the Fed. But Thursday, the market opened higher, tried to move higher, sold off a little bit. So it wasn't quite able to break above the red lines that you can see there. So something that you should be watching this Friday and next Friday, watch and see if the miners can make a weekly close above these red lines. A weekly close above resistance, that's a much stronger tell than a daily close above resistance. So that's something to keep in mind this Friday and next Friday. Now, obviously, if the metals come down to those lower targets, then these miners, they're probably not going to break resistance and they'll pull back a little bit. But look, even if we get that downside in the metals, the miners are going to be fine. Look at how far they are from their 200-day moving averages. So, and I don't even think they'd fall and test those, but even if they did, the outlook is still really bullish. So keep those things in mind. Finally, I always have to end these videos with this chart to, we have to always keep this in mind. The beautiful big bullish bases that both GDX and GDXJ are trading within and getting ready, in my opinion, to break out above next year in 2020. So, this is just setting up so beautifully for 2020. Obviously, we're not quite there yet. There's still time where you can accumulate things. You can be a little patient, but don't wait forever, because I don't think we're going to see that much more weakness before miners get ready to make that big move higher in 2020. And again, I am super bullish for 2020. And if you follow my work, you know that I tend to be on the conservative side. Haven't always been that bullish, but I think things are setting up just almost perfectly for 2020 to make a lot of money in gold stocks and junior gold stocks. And if you want some help with that, you can consider subscribing to my premium service. Go to thedailygold.com/premium. It's $149 for 6 months. And my focus is on market timing. We're trying to get you into the best stocks, the right juniors, the right companies, and at an opportune time where you can get in and make money soon, so you don't have to wait months and months. I don't want to have to do that. Look, let's try and get into the best stocks at the right time, and then use a disciplined approach where you trim big winners as they rise, and if it doesn't work out, you want to cut your losses before it becomes a big loss. And I also have the 10 Bagger podcast. And if you subscribe this weekend, you're going to get a report on a company. It's on my watch list. I think we could have a buying opportunity coming up in the next couple weeks. And this is something I think in 3 years from now could be a 10 bagger. So a little tease for you guys. Another reason to consider subscribing if you already haven't. With all that said, I thank you for taking the time to listen and watch this video. I really appreciate it. Leave me a comment. I read all the comments. Subscribe to this channel, the Palisade Radio channel. You can also subscribe to my YouTube channel. That's The Daily Gold. Again, guys, thanks for listening, and I look forward to doing another video for you in the next couple weeks.